For anyone who's been involved with Bitcoin, you might notice that Bitcoin has now turned into a bearish boyfriend. Bitcoin has been heavily sold off. If you look at the technicals, there's a clear point, a major signal where a lot of investors started dumping their holdings. That point was when Bitcoin broke below the MA50 line, or the 50-week moving average, which happened when the price was around $103,000. The date of this event was September 12th. Right now, the price of Bitcoin on the weekly chart, the price dropped and is hovering near the 100-week moving average. I looked for Bitcoin price patterns, both bullish and bearish, to see if there's a recurring number of days the price moves. This same pattern has occurred 3 times before. Let's see if this time is the same. This is just for fun, so take a look. Today, we'll cover several Bitcoin aspects, not just the technicals, but also one of the favorite topics on this channel is macroeconomics. What's happening in the global economy right now that's putting the most pressure on Bitcoin? Honestly, one of the biggest factors is Japan. Japan is a major turning point that's currently weighing on Bitcoin's price. And there's another thing we can't ignore. The banking giant JP Morgan is currently short selling MicroStrategy, or as it's now called, Strategy. That's because the price of Strategy stock is directly tied to the price of Bitcoin. Right now, as Bitcoin's price is dropping, Strategy stock is tanking too. And let me tell you, the price of Strategy stock will definitely have an impact on Bitcoin's price because Strategy, the company, holds about 3% of the entire Bitcoin supply. So if you're someone who's really into Bitcoin, this video will help you cut down a lot on the time you'd spend researching Bitcoin info. But if you're someone who thinks you already know it all, if you don't like Bitcoin, you can just close this video. But I have to say, you might miss out on learning something new. Because today, if you already enjoy watching this channel and you're into finance, don't just write off Bitcoin. These days, Bitcoin isn't just Bitcoin anymore. It's actually one of the leading indicators of where the global economy is headed. In this video, I'll explain why that is. And if you want to support Bitcoin-related content, you can do so using this QR code right here. Or if you want to support my channel, Money Matter, it's super easy. Just hit like, share, and leave a comment to chat with me. But what I'd really love is if you'd subscribe, so when I upload a new video, we can catch up again. And most importantly, this channel is open to everyone, so feel free to comment whatever you'd like. Just keep it polite and respectful. No fighting. Thank you. In the world of investing, there are forces that put pressure on the prices of all kinds of assets, and they come from 2 sides. The first is the technical force, which refers to technical analysis, looking at investment charts and all that. The other force is the macro force, or macroeconomic factors, which I talk about a lot here on Money Matter. Things like how the economy's doing, or if there's a war going on. Are these things putting pressure on the market? Is the Fed going to raise or lower interest rates? Stuff like that. Personally, I prefer to look at macroeconomics these days, but most investors around the world actually look at both. They consider both technical and macro factors when investing. Honestly, there's a theory that says neither technical nor macro analysis alone can fully explain the realities of the market or the economy. Both are meant to go hand in hand. So in this video, when talking about Bitcoin, I want to discuss both forces, both types of pressure at the same time. Let's start with the technical side. As I mentioned at the beginning of the video, right now, Bitcoin has already broken above the 50-week moving average, or the 50-week price average, since it was around $13,000, which was back in October. According to the theory of Benjamin Cowan, if you want to know who he is, I've included the source here for you to check out. He's an influencer and a Bitcoiner. He's someone with quite a lot of followers. He once explained that every time the price of Bitcoin breaks below the 50-week moving average or the 50-week price average, every single time after that, it turns into a downward cycle. And yes, right now, the price of Bitcoin has already dropped well below the MA50 for quite some time. As of the day I'm recording this, the weekly Bitcoin price candle is currently sitting right on the MA100, which adds even more pressure. If it breaks below the MA100 or the 100-week price average, we might see an even longer red candle because that would be a signal for a lot of investors to start panic selling even more. But just to be clear, I want to emphasize that this video is not investment advice at all. I'm just explaining which points might trigger investors to want to sell. That's all. And I also found something else that's pretty interesting to show you, a pattern of Bitcoin's price movements, both up and down, where someone has actually counted the days exactly for the past 3 cycles. From all-time low to all-time high, and then from all-time high back down to the lowest point, how many days did that take? Before we look at the pattern, let me say again that I'm just showing you this for fun. Honestly, past investment patterns don't guarantee future results. But let's check out this pattern together. For example, in 2015, from the all-time low to the all-time high, it took Bitcoin a total of 1,050 days. Then in 2017, from the all-time high back down to the all-time low, it took a total of 364 days. Then in 2018, from the all-time low to the all-time high for Bitcoin, it took 1,050 days. And in 2021, from the all-time high down to the all-time low for Bitcoin, it took a total of 364 days. The most recent all-time low was on November 7th, 2022. From there, up to the all-time high we just talked about, which is June 10th, 2025, I actually counted, since 2024 was a leap year, and it totaled 1,064 days. From the November 7th, 2022 low to the October 6th, 2025 high, it's slightly different. Usually, Bitcoin takes 1,050 days from low to high, but this time it's 1,064, off by about 14 days. But looking at it like next time, from the all-time high back down to the all-time low, if it follows the same pattern or is just a little bit off, it should take about 364 days. So if you count from October 6th, 2025, then 364 days later, the all-time low should be around October 5th, 2026 for this cycle. But let me emphasize this 10 more times. Do not make your buy or sell decisions based on this pattern alone, because whatever happens, the past is just the past. It doesn't mean it will happen again in the future. This pattern is just for fun, that's all. All right, that wraps up the technical side for now. Let's move on to my favorite part, and the favorite of the Sci Money Monster channel, that's the macro forces. Current global economic pressures at both macro and micro levels. Let's see what's going on. Looking back, in every Bitcoin cycle, during bear markets or sharp price drops with those long red candles, macro events have always added pressure. For example, from 2013 to 2015, Bitcoin dropped 80%. So what happened back then? At that time, China implemented strict measures to crack down on Bitcoin. They outright banned it. They prohibited both large financial institutions and individuals from buying or investing in Bitcoin. Then in 2017, it happened again. Bitcoin's price dropped by 85%, from nearly $20,000 per Bitcoin down to almost $3,000 per Bitcoin. What happened then? Well, it wasn't just China anymore. Many countries got involved. Whether it was China, Japan, or South Korea, they all said no. CEOs, or initial coin offerings, ICOs, are kind of like IPOs, but they're for new coins, which is why they're called ICOs. Back in 2018, both Facebook and Google put measures in place to ban all kinds of ads related to ICOs. And most recently, during the COVID period, around April 2022, do you remember what happened? The Fed announced an interest rate hike. That caused crypto prices to plummet like a waterfall, a steep, dramatic drop. It dropped from 40,007 to 17,000, moved sideways and bottomed out there. Before hitting 40,007, it had reached 60,000. Friends like Psy got stuck holding at 60,000. So many did. But now losses have evened out. As for macro factors, the economy is pressuring Bitcoin's price. The main turning point is Japan, where something happened. The yen carry trade went wild, and it all started with Japan. From 2016 up until 2024, Japan's interest rates were at zero or even negative. Then, all of a sudden, Japan raised its interest rates. When Japan's interest rates were negative or zero, people would borrow money from Japan and invest it in other assets, like stocks. For example, US government bonds had a 5% interest rate, so you could make easy profits. Even after accounting for transfer fees and everything, you'd still come out ahead because of the currency difference. But then, out of nowhere, Japanese money started to have interest because they've raised rates 3 times already, and they're planning to raise them again this December. That's why the yen carry trade suddenly went wild. Investors who borrowed money from Japan to invest in higher-yielding foreign assets got spooked because now they're starting to lose money. So there's been a scramble to get out. People are dumping assets. One of the assets that's been hit really hard, and obviously, is the S&P 500. Honestly, both the S&P 500 and the Nasdaq have already experienced this earlier in the year, like on Monday. This is the same kind of yen carry trade unwinding, and the most recent case was on November 20th. Do you remember? On November 20th, the S&P 500 lost $2.5 trillion in value. That was also caused by investors panicking over the yen carry trade unwinding. The reason they panicked, as I mentioned, is because they were losing money because they borrowed from Japan to invest in the US stock market. And if people borrow money from Japan to invest in Bitcoin as well, that's also one of the reasons why investors might have to dump their Bitcoin too. But when it comes to this yen carry trade unwinding, there are 2 ways to look at how it could affect Bitcoin prices. Let's say, according to the first theory I mentioned, okay, a lot of people borrow money from Japan to invest in Bitcoin, and then when a yen carry trade unwinding or something like that happens, Japanese interest rates go up, people might panic and start selling off their assets. Just like how people might dump US stocks, but if that's not the case, for example, if the yen carry trade unwinds and people sell off US stocks, US government bonds, or any other foreign assets, and then wonder, where should I park my money now? Tick tock, tick tock. Well, maybe it's better to park it in Bitcoin. If that happens, it could totally flip the script. Bitcoin might actually surge. It's possible, just like some people have said. Some even say that by year end, Bitcoin's price could shoot up to $150,000 or even $200,000 per coin. If most investors think, okay, since the yen carry trade has unwound, where should I park my money? And they choose Bitcoin, prices will skyrocket. But just to be clear, this is only a hypothesis. It's not even a prediction. I'm just saying there's a chance it could happen, but I'm not saying it definitely will. One thing that is certain, though, is that Bitcoin these days, as I mentioned at the very beginning, is no longer just Bitcoin. Bitcoin has become one of the key indicators that actually leads the economy, showing what's going to happen in the markets. For example, before the US stock market gets hit with heavy sell-offs, Bitcoin usually takes the hit first. The reason is simple. It's because Bitcoin is highly liquid. Buying or selling is super easy. Crucially, Bitcoin never closes. The market is open 24/7. So when people panic and want to sell, Bitcoin is the easiest to sell. You don't even have to wait for the market to open on Monday. Another factor, it's hard to say who's pressuring whom, whether it's Bitcoin or MicroStrategy stock, now just called Strategy. JP Morgan released research about the situation with MicroStrategy. They even said that there could be an event that forces MicroStrategy to sell its own Bitcoin holdings and that they could lose billions of US dollars in cash. In the worst case scenario, they might even get delisted from the market, basically have their name removed from the exchange. If anyone reads this JP Morgan report, you might be shocked. Like, wow, is it really that bad? But there's one thing I want everyone to consider for a moment. Even though JP Morgan is the one who wrote it, okay, they do seem pretty credible, but no one really knows whether JP Morgan wrote this report based on the actual situation being completely straightforward, or if they had some hidden agenda or motivation behind it. No one can really know that. So whenever we read these kinds of reports, we have to try to stay neutral and keep an open mind. But if you ask whether it's possible or not, that a negative event could happen to MicroStrategy to the point where it affects the price of Bitcoin, causing both MicroStrategy itself to end up with massive debt and the price of Bitcoin to take a heavy hit, that's definitely possible. The reason people say MicroStrategy can impact the price of Bitcoin is because MicroStrategy owns a huge amount of Bitcoin. And when I say a huge amount, I mean they hold as much as 3% of the total Bitcoin supply. That means But if MicroStrategy can't manage its own situation and is forced to dump its Bitcoin holdings, it could shake investor confidence or cause retail investors to panic sell as well. This could trigger what's called a death spiral or a vicious cycle of decline. Before we go any further, let me explain what MicroStrategy actually is. Some people might think MicroStrategy is just a software company. That's right. MicroStrategy is actually more like a giant Bitcoin fund that just happens to have the label of a small software company attached to it. MicroStrategy doesn't really make its money from the software business. In their third quarter presentation, MicroStrategy showed that they currently hold about 650,000 Bitcoins, which is valued at around $59 billion. But of course, that value depends on the price of Bitcoin on any given day. The cost basis of Bitcoin for MicroStrategy is about $48 billion. So with a value of $59 billion and a cost of $48 billion, if you subtract the two, it means MicroStrategy is currently sitting on an unrealized accounting profit of about $10 billion. If you look at MicroStrategy just up to this point, it would be a happy ending, a perfect story. But in reality, it doesn't end there, because MicroStrategy actually has a certain type of debt, specifically convertible debt. This isn't a regular common stock dividend, but rather what's called a preferred stock dividend. The thing about preferred stock dividends is that they have to be paid continuously. Unlike common stock, where you can decide to pay a dividend one year and skip it the next, with preferred stock, you can't do that. You have to pay every year. For MicroStrategy, the cost of these preferred stock dividends is about $800 million per year. And where does the money come from? It's definitely not coming from their software business, because MicroStrategy's software business couldn't possibly generate $800 million in free cash flow per year. So where does the money come from? In MicroStrategy's presentation, they actually answered this question. The money comes from a cash reserve of $1.4 billion that MicroStrategy has already set aside for this purpose. So with $1.4 billion in reserve, investors can rest easy and not worry about it. They'll have enough money to pay dividends from the preferred stock for a good 21 months, but it might not even take that long. That's because MicroStrategy's stock price depends on the price of Bitcoin, right? And right now, since Bitcoin is in a downtrend, MicroStrategy is having a bit of a tough time. I need to explain a bit of technical stuff here. It might sound complicated, but it's really not. Here, I want you to understand the term NAV. NAV stands for multiple to net asset. So what does that mean? If you don't understand this term, you can't move forward. An NAV multiple greater than 1 means MicroStrategy can sell its shares at a price equal to or higher than the price of Bitcoin, meaning investors pay a premium. But if the multiple's less than 1, it means MicroStrategy is selling its shares at a price lower than the price of Bitcoin. Of course, MicroStrategy prefers when their stock's NAV multiple is greater than 1, because if they can sell at a price higher than Bitcoin, they can take that premium investors are paying, convert it to cash, and add it to their $1.4 billion reserve fund. That way, the fund can grow, and they'll have money to keep paying preferred stock dividends for a long time without any issues. But the situation gets really bad if the NAV multiple drops below 1. To begin with, it is important to note that MicroStrategy wouldn't want to issue more shares or sell more stock, because no rational investor would ever want to sell Bitcoin at a discount. In this case, when the stock price and NAV multiple are dropping below the value of 1, there wouldn't be any shares for MicroStrategy to sell in order to turn that premium into cash. And that could lead to they might have to dip into their cash reserves, another $1.4 billion to cover it. And if they keep dipping into it until the cash runs out, but they still have to pay off the debt from the preferred stock, what would they do? It's not that complicated. They just sell Bitcoin. So at that point, if the $1.4 billion cash reserve runs out sooner than expected or for any reason, that would be a situation that forces or pressures MicroStrategy to sell some of their Bitcoin. And if they eventually end up having to sell their Bitcoin, it would trigger exactly what I mentioned earlier, a catastrophic death spiral or a vicious cycle. Here is how it works. Selling off Bitcoin causes the company's overall market value to drop significantly. And as they start selling off their Bitcoin holdings, investors will inevitably lose confidence in MicroStrategy. And as I mentioned before, MicroStrategy currently holds up to 3% of all Bitcoin in existence. Because MicroStrategy holds such a large supply of Bitcoin, any sale of Bitcoin by MicroStrategy would impact the price of Bitcoin. This could cause retail investors to panic and sell their Bitcoin too, which would drive the price down even further. That, in turn, would push MicroStrategy's stock price even lower. When it gets to that point, MicroStrategy would have even less money, forcing them to sell even more Bitcoin. And so the cycle would keep repeating, getting worse each time. Most importantly, right now, it's even more complicated because major institutional players like JP Chase are also short-selling MicroStrategy right now. To be fair, though, it remains a complete mystery as to whether JP is shorting MicroStrategy just based on technical signals or macroeconomic data, or if they're intentionally trying to crash the price of Bitcoin so they can accumulate a massive position at a price lower than MicroStrategy's average entry cost. Let me emphasize this point once again. But the information in this video is not investment advice at all. Please don't buy or sell based on what I've shared. I'm just pointing out some things to watch for. Like, if this happens, it could push the price up, or if that happens, it might make the price drop even more. These are just things to keep an eye on, because right now, Bitcoin's price could go either way, heads or tails. If you're saving, then keep saving. If you're trading, then trade and allocate accordingly. Please take very good care of your own portfolio, and always remember that investing in cryptocurrency is highly risky. You could potentially lose your entire investment.